What is up, everybody, and welcome back to my YouTube channel. And in today's video I will be doing a part 2 or a continuation video of the previous video I did, which was the market structure foundation video. So just a quick recap of what we spoke about in the previous video. In the previous video I introduced to you how the market delivers, and I said the market delivers in one of three ways. So we could either be in an uptrend, a downtrend, or we could be consolidating. I did also bring to light that the market uptrends and downtrends have a characteristic, which was we have one impulsive leg and we have a corrective leg. Now, just to bring something to light, we may not always get an impulsive leg and a corrective leg. Sometimes you could get an impulsive and an impulsive, but we for this educational series I will not be talking about the impulsive and impulsive, because by the time I am done with this series you will understand that the impulsive and impulsive correction really doesn't matter. I am starting the educational video out like this because I feel this is a foundation in which you will be able to frame your trades. Okay, and today's video, the one thing that I'm introducing in today's video is pretty much all you need to know, or basically what you will be trading for pretty much for forever, if you understand this correctly. Okay, so I'm just going to quickly give you an example of what an impulsive leg and a corrective leg may look like. I am on the 4 hour. I might as well give this example on the 4 hour because I don't want to change time frames right now. Or maybe I should. Should I? Oh, sorry, I'm on the 1 hour. I don't know why I thought I was on the 4 hour. But anyway, we shall proceed. So this will be our lower high, and as you can tell from lower high to lower low, because we broke this low here, you can tell that this leg was very impulsive. But the correction leg from lower low to create a lower high is very tightly packed. It's very consolidating like. Most people lose a lot of money within this because the market sort of just zigzags around and slowly grinds to where it needs to get to. And then after it gets to where it needs to get to, we have another impulsive leg. Okay, this, what happened right here, is what this video is going to be explaining. I am on the lower time frame, but you're able to, with chart experience, you'll be able to do what I'm doing right now, which is spot higher time frame, higher highs or lower lows on a lower time frame. Okay, so with that being said, I am going to introduce substructure to you. Substructure is mainly what we trade in a higher time frame movement, and substructure is basically just lower highs and lower lows, or higher lows and higher highs within a large time frame leg or structure. Okay, so a textbook example, like I always start with, would look like, let's say we're starting from a lower high. It would look like this. So we have a low, lower high, low, lower high, low, lower high, low. And in the corrective leg we could also have a high, high, low, high, 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 low, high, high, and then we have the exact opposite again. We have a low, we have a lower high, and it goes on and on and on and on, and I hope you get where I'm trying to get with this example. This will be a fairly short video because I'm only introducing one thing to you, and then I will be done with this. The reason I have split the videos in two is I didn't want to confuse you on the first video by telling you to look for uh, higher highs and higher lows and be able to see them on your charts and mark them out, and then also introduce internal structure. I felt that would confuse you as a beginner, but now that you're able to tell that, I can now introduce internal structure to you. So I'm going to move to the 4 hour just to give you a chart example of what internal structure may look like. Also, before I get to what internal structure looks like, if you look at the textbook example right here, the move from this lower high to this lower low, breaking this, if we are on the lower time frame, we would consider this as external structure. The bigger time frame structure then becomes external structure. Some people like to call it a parent structure, but I just call it external structure. So every time we break a larger time frame low or high, we consider that as a break of external structure if you are on the lower time frames. Okay, because even the 4 hour structure, if you look at the daily, is internal structure on the daily time frame. I hope that didn't confuse you and you understood what I just said right there. Okay, so I'm on the 4 hour time frame. I'm going to give you an example of internal structure. So right here I'm going to pick this level right here as my lower high. Then I'm also going to pick this level right here as my lower low. Why have I done that? Because we broke external structure on the 4 hour, which is right here. Alright, there you go. So we broke below this 4 hour structure and closed below it, and forming our lower low right there. Now for us to see internal structure, we would have to be on a lower time frame, so I'll move back down to the 1 hour. Okay, so on the 1 hour, as you can see, we have our low here, we have our lower high there, we have our low here. Why have I picked this low? Because this low, we did wick below it, but we did not close below it with these. So this then becomes the new low. Then we have a lower high here, and we have a lower low, lower high, lower low, and so on and so forth. That is what internal structure may look like. I'm only giving you one example for this. Actually, I could give you another one, which is up here. So on the 1 hour, I am going to draw out 4 hour structure, which is that as my lower high. Then I'm also going to draw this as my lower low. Then I am also going to draw this as the break, or the 4 hour break right here. And as you can tell, we do have internal structure on here as well. We have an impulsive correction, impulsive correction. But then you notice we have this leg right here that takes basically wipes everything in here. So if you are in any trades holding extra long, you would have been taken out, or you have had losses right here. You have this leg. So this leg is also external structure. So this would start from here. So that would be your higher low. Alright. So this would be your higher low, and this would be your lower low. So on the 4 hour, I think let me do this to make you understand it easier. So we are looking at 4 hour structure on the 1 hour time frame. So this would look something like this, and then like that, and then like this, and then like that, and then I can't really go below that, and like that. So that is 4 hour structure. And within that 4 hour structure, what do we have? We have internal structure, which is right there. Right there. All of this is internal structure. All of that. So every time we break below this, we've broken external structure, creating a larger time frame. Lower low or higher high, or yeah, you get where I'm going with this. Alright, I think that's all that I want to introduce to you today. I hope you found this video helpful and enjoyed it. If you did, please remember to hit the like button, subscribe to my channel, share my video, and I will see you in the next video. We will I will probably think about doing a conclusion video or one video that's going to put all this information together, because right now I'm giving it to you in bits so it's easily digestible, and I'm trying not to confuse the newer traders. So I hope this hasn't really confused you, and I hope I have made it as simple as possible to understand, because I'm trying to do this in a step-by-step style of educating. So I will see you in my next video.